Good day, all. Ira Epstein of Linn Associates with your metals market wrap-up, and this is for Thursday. We're at the 17th of October, 2019, approaching 3:35 in the afternoon. So as we're looking at the market, it's not settlement prices yet, but you have an idea where the stock market is. It's very close to this on the settlement price. All were higher, and the metals finished the day higher as well, with gold up and silver up. But they didn't break through key areas. So this has been a rally that's a bit labored, and the market's trying to figure out what to do with that. Copper prices rallied, as did the palladium prices, but rather platinum. I think palladium's got itself to the point where maybe it's ready for some profit taking, but it's still an uptrend market. We're looking at the crude, both numbers higher, and that's important because we had big builds in both over the API number yesterday and today's EIA number. And yes, they're a day late, but remember, we had Columbus Day, but both showed big builds in the crude area. They had draws in the distillates, and you're seeing the rally here. That's not a bad sign. So let's go to the charts and see what we have. On a weekly area chart of closes in soybeans, what we have is the market still up, if you will, pulling back. I have not heard anything yet on the ethanol program that the president has. I haven't heard any more news on the U.S.-Chinese trade deal. So let's sum it up that way. For the week, beans are down so far 4.5 cents. When we come into the daily chart, you're in a distribution of price area. You can almost see that right here over the past 4 or 5 days. And as you take a look at the chart action today, you made the lowest low of this recent break and you closed higher. Now, what you don't want to see is the market take out this low, because that would create one of those ugly chart patterns as I talk. It also would create, if you take that out on Friday or Monday, what I call a bull trap. Those that bought the market looking for that on the way up get themselves caught, and the market could pull back. Where's support? Well, it's wherever that 18-day average pops up, and right now it's moving to the tune of about 2 cents, 3 cents a day. So that might be tomorrow up towards that 9.17 level. In terms of resistance, well, you were running at it. You began running at it right here at the end of September, backed off, and then ran early on. And ever since, 5, 6 days ago, the market started feeling some of the pressure. Where are we going to be in the harvest? Farmers are out in the fields. If you watch your local news, you're probably going to see them out there. I saw today Fox was carrying stories about it. They had a farmer on his combine in Indiana. And it's amazing how mechanical these things are now. And I'm talking, the one I saw was using Watson out of IBM as they figure out when they're actually doing everything. What is the yield they're getting, moisture content? It goes on and on, so the farmer can make some decisions. As we look at the momentum of the market, the momentum of this market is turning down. Now, that's bothersome. It's 2 days in a row that you've lost the embedded reading, which means even if it turns up tomorrow, it cannot re-embed without going through 3 days of the process again. Often, price leads, if you will, momentum leads price. That's what I meant to say. And while the price was up today, momentum's down. You've got divergence happening in this market. And if the market breaks, I'm still looking for that 18-day average of closes. If it rallies from here, great, but you're still going to be in an overbought condition. In the meal market, I'm bothered by the fact that meal, as you can see, is leading the parade to the downside. And admittedly, it started this break back here, got through these numbers, and then the 18-day average, that line in the sand, becomes the key. If it rallies from here, the 100-day average becomes the resistance in the market. You've got a bit of a correction going, and you're still overbought. When either the K or the D line and the SSTO, slow stochastics, are over 70 and not embedded over 80, the market's overbought. To work out the overbought condition, you either re-embed, and that's a 3-day process where both numbers have to be over 80 the way that I teach it, or the market goes sideways to lower and these numbers work lower. That's the dilemma right here. The market that is the stronger of these is the soy oil, as the spread has taken that over. You still have higher lows, higher highs, but you're in a resistance area, the upper Bollinger Band, and we have a market that is still in overbought territory. So that's where I see the bean complex. In the corn market, With today's action, we have higher lows and a higher high. That's bullish. But it is marked by the fact that you're very, very overbought. In harvest time, the question is, and this is, remember, everything got pushed back this year because of the wet weather. Do you want to be a buyer of grains? Well, that's one of the reasons that I use more Research Center. We'll talk about that in a moment here, because I look at what the seasonals are. But as a chartist, I have an uptrend, upside bias that is overbought in the market. In the wheat market, this has been the stronger of the markets. It's been coming up. There's some damage that they're saying to some of the wheat that's been planted with the snow, with the cold that we had. You can see that in the marketplace. The market's still in an uptrend, running against the upper Bollinger Band. 1 day over, 1 day under. Today you finished 525.5, about 4 cents under, but you can see you're wavering there. Still very bullish, hasn't ended that. Will the market embed? Both numbers today over 80. Yesterday, both numbers over 80, but not the day before. Most of the time, you don't embed. But if it embeds, it's another sign of strength. So even if it doesn't embed, you still have the market with 2 layers of support under it, 503 to 496 3/4. Sugar market, I think I said when the market got up like this, be careful, you've had no follow through in this market. Now the interesting part is here you got that reversal day. Remember, that's an outside day. Let me make sure that is. This day's high right here was 1259. You fall back, you went to 1262. Yeah, I'm right on that. If you take this day out, then I look at that as the bull trap, like we were talking in other markets. And if you take that out, then I look for the closest moving average. Well, they're above the market, or the Bollinger Band, that's the one. Market yesterday falls back, and today right to that number. That's all she owed. Is that the right grammar? In coffee, I know when I was putting out my report this morning, my subscriber report, I think I was recording 5:40 in the morning. Market was up right by the highs. I said, be careful, folks. You've got an embedded reading. You're near what I'll call one of the key moving averages. I don't show you all the key moving averages in these reports. I do it in my morning subscriber video. Needless to say, the market fell from there, 180 points from the day's high. In the cocoa, you failed again at the upper Bollinger Band with an outside day down. Momentum is flat. You're out of a trend. You have now a lower low, a higher high, bias is up. You're fighting a big battle right here at these numbers. In the cotton market, still bullish, hasn't changed. Overbought as can be. It keeps getting to the Bollinger Band and slipping back. It's a slippery road right here. But obviously, this market's looking like I am. Number one, we had sideways action. We broke out to the upside, and you didn't get thrown back down here. You did get thrown back under the 100 and the upper Bollinger Band. Then the market made its run for the 18-day average, couldn't quite get there, and this is what it's been doing since. Interesting, but I'm going to call it a mini breakout to the upside. It is overbought. It's at a resistance zone. In the cattle market, the live cattle maintains its fully embedded reading. That means on pullbacks, I continue to see support, yet the feeder cattle gave that up. It's lost the embedded reading. You had yesterday an outside day to the upside. You know what I just said about sugar. If you take out the low of an outside day up within the next 2 trading sessions, my own rule, I can't tell you that other people do this, is that you often make a run for the closest moving average or the closest lower Bollinger Band, the closest of. In this case, the 18-day average. I wouldn't be surprised if that's where the market goes to regroup. And as I said, you lost the embedded reading. When can you get that reading back? The day after you lose it, otherwise it's got to rebuild completely. In the hog market, this doesn't look like there's a Chinese deal for pork. I just can't get away from that. You broke through this low, so you got a lower low, higher high. At the end of the day, we're just churning away, not getting much follow through one way or the other in that market. So I put that all together and I start looking at what are the seasonals. Why? Well, let's understand where we're at in a point of time. We're at October. In another 30 days, we'll be talking snow, rain, very freeze, whatever it is. So as an ag trader, I start looking at that. What else do I look at this time of the year? Harvest. That's one of the obvious things that you look at. And as you start putting it together, what is the typical thing that, say, a Dees corn or an Ove beans or a Jan beans do at this time? Well, the Moore Research Center keeps a database on that. And you can go back with their interactive charts and look at bull years, back year, bear years. You can look at a 5, 15, 30-year periods of time. So you get the whole idea. They also keep a database that if you bought or sold on a certain day and got out at this day, that's worked X percentage of the time. Would I use that on its own? Flat no. But do I pay attention to it? Oh yeah. I definitely do, but I tie it into my other tools. So like anything else, nothing on its own. It's part of the hierarchy of things that I have set for myself that I look at. But the best way to learn about all this is to see it on your own, because their special reports are great. If you're new to seasonals, this is something to look at. We make it available. Simply go to our website, sign up for your free trial. You can give us a call. My staff will take care of it, or you can click up here to get to that page as well. In the meantime, I'm Ira Epstein. You have yourself a great evening and all, and I'll see you all first thing in the morning at my morning flash video or my subscriber video if you're a paid subscriber. Take care.